Hi there and welcome to my channel Simply Talks, and today I'm going to talk about Heritage Foods and what is wrong with the company. So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do that with their own due diligence and research, and I am not in favor or against any company that I talk about. Now about the company. So Heritage Foods was established in 1992 and is the largest dairy firm of South India at the moment. It exports to Europe, Gulf and Asia and boasts of tie-up with major brands in India as well. Has over a dozen products including milk, curd, ice cream, lassi and many other products that they sell to a number of top brands across India. It also has a business in renewable energy, which is a minuscule of their total, you can say, business altogether or total sales. If you look at the numbers of financials, they were up by 26% in terms of sales, but the profit dipped sharply from 40 crores. It has gone to something like 10 crores. It has dipped by 75%. There is reasonable debt for a company that is into the consumer domain. To have this kind of debt is not quite right, and many other companies do trade debt free. So that is also one of the reasons why the stock has not commanded very good valuations in that respect, and debt has increased over the last 2-3 years. Before the pandemic, the debt was not that huge, and it increased over the last 2 to 3 years. ROE of 10% is nothing great to write home about. Net profit margin of 1.6% is again not the best in the industry, and these are some of the reasons why the stock has been trading where it is trading at the moment. In terms of valuation, it looks stretched based on current numbers and the way the numbers are panning out. There is good institutional holding, but FIIs and DIIs have reduced holding over the last 2-3 quarters, and it is not remaining that robust as it used to be earlier. And the decline in the PE has been due to the bad results, as I mentioned, and due to the higher, you can say, debt that they have gone with, and the margins have shrinked over time. And there are other companies in the consumer segment, in the eatery segment, that are producing better, you can say, margins. So may move a bit, but a market cap of 15 20 crore 1540 crores. Right now the market cap is around 1370 crores. So when I made the presentation, it was around 1550 crores. Market cap of 1370 crores looks less based on sales, but profitability has shrunk. So profitability needs to come in for the stock to do well. So in my opinion, it looks expensive at these valuations. So what are the problem areas for the company? Raw material costs have eaten into the profits, and you need to understand that oil prices were high, although this quarter has been a quarter in which oil prices has dropped globally, but there are issues with other raw material prices of other products, fodder, etc., that have gone up over the last year or so. Growth has declined over that period, and margins have declined, so that was also a reason why the stock has gone down. The biggest reason for a stock to go down is there are two reasons basically. One is profitability, the other is margins, and in both the front on both the fronts, this company has not been doing that well. It is a very competitive market, and so they would have to reduce prices in order to gain more market, or in order to increase sales, and that will just eat into profitability. So it's a vicious circle that they have now gone into. In order to get out of it, they need to either do backward integration, or they have to come up with innovative products so that the products sell big time and they can have a reasonable pricing for that. A lower global and national demand over the last couple of years has also marred the sales and the profits numbers, and a global situation is not getting any better. So geopolitical uncertainty remains, so their business in Europe and US is getting hit big time. In terms of technicals, it has collapsed as a stock. So it was trading around 350, 360 just about a couple of months back, but now it has gone down to below 350 levels. 350 now will act as a very strong resistance, and major breakout is expected above 395. But wait for breakout above 350 to buy into it. It's looking extremely weak at 280, 290 rupees, may go down to 250, and that is where some sort of support lies. So if you really want to buy a fresh, probably look for levels closer to 250 or levels above 350 to get into the stock. So in my opinion, avoid till the results improve and buy other FMCG businesses. That would be a better thing to do. If you have it, then probably sell on any rise, say 300, 320, exit the stock and look at other businesses as well. Institutions have also reduced holdings, as I explained, over the last 2 3 quarters. Not by a lot, but they have reduced holding and they are moving into other, you can say, companies. And only add when things improve on the ground and things improve with the numbers. So this is a video on this stock. Please like and subscribe my channel and hit the bell icon so you get my video straight away when I post it. And kindly support me on Patreon. Thank you.